Military experts tell me this is a major turnaround from Boeing when just about 5 months ago, people were talking about whether Boeing Defense would have to sell off parts of its business due to its struggling finances.
In a jaw-dropping shift, Lockheed Martin, long the unchallenged king of stealth fighters, has been blindsided. Boeing, a surprising underdog on paper, just clinched the Pentagon's crown, the $20 billion next-gen air dominance contract for the F-47, a program projected to balloon to over $500 billion. At the Paris Air Show announcement, President Trump and Air Force officials declared Boeing's proposal best overall value. Surpassing Lockheed's seasoned platform offerings, Lockheed's stock immediately tumbled, downgraded by analysts, wiping away billions in market value. This isn't just another bid lost, it's a tectonic moment. Boeing is re-emerging from the shadows of MAX crises and Air Force One delays to claim its place in combat aviation. Lockheed, meanwhile, is forced to pivot, funneling advanced NGAD stealth tech back into its aging F-35. So what does this shift mean for future air dominance, industrial balance, and global power projection? Let's unpack how Boeing pulled off this upset, why Lockheed's world just tilted, and what's at stake for U.S. air power strategy. The Groundshaking Announcement. The world paused as Frank St. John strode onto the stage at the Paris Air Show. Behind him, a sleek rendering of a sixth-generation fighter, dubbed the F-47, flew silently across the screen. In a single moment, Boeing had just dethroned its longtime rival. The Pentagon awarded Boeing a $20 billion-plus contract to develop the groundbreaking F-47 under the NGAD program, a surprise that may swell to $500 billion over its life cycle. Markets reacted instantly. Boeing's stock surged 3 to 5%, while Lockheed Martin saw a sharp drop, erasing around $6 billion in market value. Boeing's share price rallied on the announcement, showcasing the industry's shift in dominance. It wasn't just business, it felt personal, a statement that U.S. national defense priorities were recalibrating. Observers noted that this marked an inflection point. Boeing, known for airliners and tankers, was back in the fighter jet game. Big time. Suddenly, Lockheed's decades-long rule in stealth fighters faced serious challenge. The battlefield had moved from production lines to boardrooms, and Boeing had just scored the opening punch. In terms of all the attributes of a fighter jet, there's never been anything even close to it. From speed to payload, former President Trump said during the Oval Office announcement. That moment wasn't just a contract win, it was a signal. The era of the F-35 and F-22 might soon be overshadowed by Boeing's emergence. A new chapter in American air dominance had begun. With the contract sealed, Boeing entered a new phase: redemption. Fixing its beleaguered defense division, rebuilding confidence, and meeting expectations. In the next chapter, we'll explore how Boeing planned to make its triumphant return and what this means for the defense landscape moving forward. Boeing's comeback play. Boeing's re-entry into fighter aircraft after years in airliners and tankers felt like a high-stakes comeback. The company had weathered setbacks, MAX groundings, KC-46 delays, Air Force One overruns, but the F-47 contract offered a lifeline. The Defense Department's endorsement signaled renewed trust in Boeing's capabilities to build advanced combat aircraft. This fighter isn't just new, it's June forward. Boeing built the F-47 from scratch with stealth, AI, sensors, and networks in mind. It was designed alongside drone wingmen, the family of systems concept, combining manned fighters with autonomous companions. The initial $20 billion development and engineering deal is just the beginning. Analysts expect the program to swell to $500 billion over its operational life. Internally, Boeing Defense, Space and Security beefed up production in St. Louis. Advances in digital design and open architecture tools were rolled out, signaling a departure from the cost and schedule overruns that once plagued the company. Boeing's CEO later added, "This win will secure our fighter franchise for decades to come." But the real challenge looms: execution. Boeing must marry ambition with delivery, building factories, training workers, and proving its design will work in the air and in battle. Success here could launch Boeing back to the top. Failure would risk reinforcing Lockheed's dominance. The comeback has begun, Now Boeing must deliver. While Boeing fights to prove itself, Lockheed Martin reels. Losing its claim to stealth supremacy brings more than financial pain. It forces introspection. Up next, how Lockheed, caught off guard, responded to this stunning upset and what it means for the future of American defense. Lockheed's stunning defeat. For decades, Lockheed Martin reigned supreme in stealth fighters. Its F-22 and F-35 programs set the gold standard, but not this time. As Boeing's F-47 announcement echoed off the tarmac in Paris, Lockheed found itself blindsided. Their dominant streak shattered in a single stroke. Investors reacted immediately. RBC downgraded Lockheed from buy to hold, cutting its price target to $485, a fall that wiped out about $6 billion on market value. The move sparked alarm. What happens when the F-35 pipeline slows? With a significant portion of Lockheed's revenue tied to these jets, analysts warned of a revenue cliff. Inside Lockheed's boardrooms, the mood was stark. Rethink or risk fading. CEO efforts to pivot toward classified programs and balanced portfolios, an approach known as no must win, now face real pressure. The company must swiftly lean into other domains. Missiles, space systems, sustainability contracts. That is, if it hopes to regain momentum and relevance. Yet Lockheed also holds one powerful weapon, a robust F-35 backlog and the production systems to match. But that may not be enough. To remain a prime contractor, Lockheed must compete harder, not just reacting but innovating. Losing defense dominance might not be the end, but it's clearly a catalyst for strategic transformation. Why Boeing now? Political and strategic drivers. Boeing's selection wasn't just about planes, it reflected a strategic shift in U.S. defense policy. Following the Trump-era doctrine to diversify the defense industrial base, Boeing's F-47 was the clear beneficiary. The Pentagon wanted a backup to Lockheed's dominance, ensuring competition and resilience in future threats from China or Russia. Another key factor? The F-47's design aligns closely with emerging doctrine. It integrates stealth, advanced sensors, and most notably, drone wingmen, reflecting a push towards software-led, networked combat. That's exactly what Trump-era defense strategists prioritized. Hardware built for AI-centric warfare, not just traditional dogfights. Boeing also promised speed. Equipped to support agile operations, smaller-sized production batches, and runway independence, the F-47 proposal appealed to the Pentagon's need for flexible deployment in contested zones. It was modern, fast, software-ready, and ready for a new era of conflict. International potential factored in too. Trump himself pitched the F-47 to Japan as an export fighter, signaling its global ambitions. China and Russia have long challenged U.S. air dominance. By choosing Boeing, Washington signaled that America intends to stay ahead on multiple fronts. With strategy aligned, Boeing needed a fighter that stood apart. That's exactly where the F-47 shined. Built for 6th-gen warfare, built around drones, and built from scratch. Next, we'll break down what makes the F-47 truly different from its predecessors and how its new design philosophy redefines aerial combat. F-47 versus F-22, F-35. The F-47 is not just another stealth fighter. It's a leap forward in capability and concept. With a combat radius exceeding 1,000 nautical miles and speeds above Mach 2, it surpasses the F-22 in reach and sustains operations longer too. It integrates advanced stealth, AI-driven sensor fusion, and onboard drone control, surpassing the F-35's 5th-gen design. Built with a family of systems mindset, the F-47 acts as the central node among drone wingmen, swarming fighters built for specific roles, from electronic warfare to reconnaissance. This manned-unmanned teaming is core to its NGAD role. Designed fresh, not retrofitted, it avoids costly modifications common in older jets. It's lighter, modular, and purpose-built. It costs less than the F-22, offers larger buys, and calls for fewer support systems. As Major General Joseph Kunkel noted, earlier upgrades proved less effective than a clean sheet approach. In short, The F-47 outpaces older fighters by combining range, speed, AI, stealth, and drone synergy. It's more than evolution. It's a new era in the sky. Sides have been drawn, Boeing with its fresh architecture and strategic backing versus Lockheed clinging to legacy strength. Now Lockheed must shift its game. Next up, how the storied fighter maker is restructuring after this upset. Lockheed's new strategy, de-risking. Lockheed Martin's loss was more than symbolic. It shook its foundation. The company adopted a no-must-win strategy to reduce risk in large, high-stakes bids. Senior leaders pivoted attention to classified systems, missile development, satellite defense, and sustainment programs, ensuring financial stability even without the NGAD contract. Central to this pivot, reinforcing the F-35 line. Although procurement slowed in 2025, Lockheed still has a large production backlog, providing near-term stability. By focusing on evolutionary upgrades and allied sales, Lockheed seeks to extend F-35's market relevance. Meanwhile, investment in Navy aircraft persists. Lockheed aims to compete for F/A-XX after the Navy's program gets back on track following budget delays. Though Lockheed exited the NGAD race, it remains a top contender in future platforms. Despite losing the fighter crown, Lockheed's broader portfolio, space, missiles, ISR, remains strong. But to stay top tier, it needs to rebuild momentum, innovate faster, and maintain its grip on global defense. Losing the NGAD doesn't end Lockheed's mission, but it forces it to re-enter with a sharper, leaner approach. Global financial fallout and shifting budgets. Boeing's F-47 win altered Pentagon economics almost overnight. Lockheed Martin's F-35 program had already been strained, but now corporate dynamics shifted even more. RBC downgraded Lockheed from buy to hold, slashing its share target from 550 to 480. Citing weakened growth outlook after the aircraft loss, Wall Street analysts said Lockheed must adapt fast, or risk slide. Lockheed still relies heavily on F-35 revenues, nearly 30% of its annual income. However, planned procurement cuts in 2025 revealed vulnerabilities. Fewer jets ordered means squeezed cash flows. Lockheed absorbed about $2 billion in cost overruns on classified programs recently. Meanwhile, Boeing's stock jumped 3 to 5%, signaling market confidence in its defense resurgence. Congressional spending priorities are also shifting. The Pentagon budget is increasing, but it's favoring agile, fixed-price aircraft programs over unpredictable development contracts. The NGAD contract, which allows Boeing profit in development, marks a departure from the cost-plus overruns model that plagued commercial projects. The impact? Boeing's defense arm gains a new foothold in fighter jets after years of struggle, while Lockheed is forced to diversify. And with contracts like F/A-XX and B-21 still up in the air, future competition could define the aerospace industrial base for decades. This marks more than a one-off upset. Boeing's NGAD score signals long-term revival. Meanwhile, Lockheed must retool its strategy. Next, we examine Boeing's defense resurrection. What this victory means for its corporate identity and future contracts across space, cyber, and aerospace. Boeing's defense resurrection. Boeing's F-47 win is a turning point. After the MAX crisis, the company renewed its defense focus, opening a high-tech fighter production line in St. Louis and embracing digital design platforms. The defense division, once overshadowed by airliner woes, can now show forward momentum. This contract restores Boeing's credibility. It not only enables fighter jet manufacturing, but opens doors to adjacent programs like spacecraft, directed energy systems, and cyber tools, all needing the same advanced engineering and manufacturing capabilities. Boeing's improved execution and financial structure, focused on more predictable contracts, signal readiness to take on future Defense Department challenges. Moreover, Boeing's win supports broader objectives, salvaging dual-use production capabilities, maintaining the skilled workforce, and penetrating international fighter markets. It's armed the U.S. with competition, and revived a major industrial base piece. However, execution matters. Boeing now carries the expectation of delivering a next-gen fighter at scale. Success could ignite a renaissance. Delay or failure, Boeing risks fading back behind Lockheed's dominance. Boeing's rise came at Lockheed's expense, but the latter isn't out. Point 9 looks at how Lockheed is pivoting, upgrading the F-35, targeting space and missile programs, and refocusing its global strategy to reclaim footing. Lockheed's pivot toward resilience. Lockheed's response was measured and strategic. CEO Jim Taiclet announced a no-must-win stance, avoiding high-risk bidding while doubling down on classified systems, space assets, and missile defense. The F-35 backlog remains a revenue anchor, and Lockheed plans to upgrade it with NGAD-derived enhancements, aka 5th Gen Plus performance, potentially offering 80% of F-47 capability at half the cost. Exploring new markets, the company pitched missile and sensor systems to the UK's Golden Dome Air Defence Initiative. It's also investing heavily in partnerships with European firms, seeking non-US revenue streams for F-35 exports and future systems. In parallel, Lockheed is eyeing future Navy aircraft programs, FA-XX, and hypersonic weapons, making it leaner and tech-focused. It's also betting big on space-based ISR and strategic missiles to offset losses in fighter production. This is Lockheed's turning point, reinventing itself through upgrades, diversification, and global engagement. The challenge will be balancing innovation with reliability and showing investors it's more than a single program defense house. Implications for Pentagon budgets. Boeing's F-47 triumph reshapes defense spending. For the FY 2026 request, the Pentagon plans to allocate over $4 billion specifically for NGAD, including the F-47 and complementary drone systems, as part of a broader $205 billion procurement budget. This surge reflects a strategic pivot, ramping up next-gen investments while imposing an 8% annual cut on legacy Air Force spending. The message is clear. The era of agile, software-forward combat platforms is a top priority. Fixed-price contracts gain favor over cost-plus models, a shift toward fiscal discipline. With the NGAD's initial $20 billion R&D contract expected to swell into the hundreds of billions over its life cycle, the Defense Department must restructure budgets around long-term commitments. For Lockheed, this budget recalibration is a challenge. The F-35's share of the company's revenue, around 30%, significantly contracts in 2025. Meanwhile, programs like FA-XX face uncertainty amid funding reassessment. Internally, Lockheed must balance between funding its F-35 upgrades and investing in future systems without NGAD income. Meanwhile, Boeing's ability to secure and deliver NGAD funding enhances its case for additional contracts, such as FA-XX, and supports its ambition to manage multiple fighter programs concurrently. That's a structural win. More funds allotted to next-gen projects, less tolerance for spiraling costs, and dominance of software-driven designs across defense portfolios. With funding realigned, the question turns to industrial readiness. Can Boeing and the wider aerospace base sustain two 6th-gen fighters, the F-47 and Navy's FA-XX, without bottlenecks? Up next, the health of the industrial base and future competition in the fighter market. Industrial base and future competition. Securing the F-47 was more than a victory. It was a test of America's industrial muscle. Boeing insists it can handle both the Air Force's NGAD and the Navy's FA-XX programs simultaneously, with robust facilities in St. Louis and partnerships across the aerospace supply chain. Whether that's realistic is now in focus. Lockheed's absence from FA-XX leaves Northrop Grumman and Boeing to battle for that contract, narrowing competition. For Lockheed, staying relevant will mean delivering on F-35 enhancements, advancing space systems, and supplying weapons and C4ISR technologies. These dual competitions aim to preserve competition, reducing supply chain risk and pruning stagnation. The result? Innovation, subcontractor diversity, and distributed production across the U.S. Smaller tech firms may benefit too. Advanced sensors, AI, and software modularity will become critical. Lockheed believes its 5th Gen Plus vision for the F-35 could bridge the capability gap at lower cost. The industrial base is being reshaped, not by mergers, but by multi-pronged competition and a software-first approach. With factories humming and contractors adjusting, analysts ask, how durable is this funding surge? The answer may lie in geopolitical trends. Next up, how global threat dynamics, especially regarding China, are shaping this fighter race in future strategic posture. Geopolitical consequences. The F-47 is not just height of technology, it's a message to Washington's adversaries. Amid rising tensions in the Indo-Pacific, the Pentagon chose Boeing partly to send a visible signal of American air power renewal. Enhancing stealth and drone-capable superiority over contested areas strengthens U.S. credibility in hotspots. Allied nations are watching. The jet's manned plus drone model aligns with NATO modernization efforts in key partners like Japan and Australia. Boeing's export opportunity grows, a win not just for America, but for Allied defense architecture. But the global field is shifting. The UK, Italy, and Japan are jointly developing their Global Combat Air Program, GCAP, aiming for a 2035 delivery. China and Russia are also racing ahead with their own 6th Gen fighters. The F-47, then, is part of a global system, a symbol of continued U.S. leadership, but also part of a rising global fleet of next-gen air forces. We've covered budgets, base capacity, and global strategy. Now it's time for the final question. Will Boeing deliver on promises, and can Lockheed adapt and recover? The stakes are high. Next comes the verdict. The final verdict. The F-47 contract stands as a hinge in U.S. air power strategy. Boeing's win ushers in renewed industrial competitiveness and a fresh chapter of 6th-generation capability, but only if deliveries are timely, capable, and cost-effective. Meanwhile, Lockheed's pivot to upgrades and diversification reflects a resilience rooted in adaptability, rather than entitlement. Pentagon doctrine has clearly evolved. Future air dominance means software, drones, and network platforms, not just hardware. Funding, force design, and alliances are now keyed to that vision. If Boeing delivers, it will own the next frontier. If not, Lockheed's 5th Gen Plus path and alternative contracts could restore balance. At its heart, this is a test. Innovation velocity, acquisition discipline, and geopolitical foresight. Will industry rise to match the strategy? Will Lockheed find footing without NGAD? Will American air power maintain its edge in an increasingly contested world? Let's watch this space. The skies may have just reopened, and the next chapter of aerial dominance has begun. Lockheed's loss of the NGAD contract is more than a blow. It's a wake-up call. The company responded not by protesting, but by redirecting its effort. CEO Jim Taiclet spoke of transforming the F-35 into a 5th-generation plus fighter capable of delivering 80% of a 6th-gen jet's performance at half the cost. No protest, no pause, just reinvention. Lockheed has absorbed the feedback, refocused, and doubled down on missile systems, space assets, and advanced sensor technologies. Yet the scoreboard tells a different story. Wall Street downgraded Lockheed's stock, flagged its future as shitting, range-bound, and raised red flags about revenue uncertainty, fueled by the absence of a major new aircraft program. Boeing, on the other hand, gains momentum, not just in fighter jets, but across defense's broader industrial base. Its stock rose sharply, and its defense division is now fully re-engaged, shifting from crisis response to forward-looking innovation. This isn't just a corporate contest, it's a strategic realignment. The Pentagon is playing a long game, ensuring multiple capable suppliers through software central designs, drone integration, and industrial resilience. With Boeing in the lead on the manned F-47 program and Lockheed retooling F-35s and expanding its C-4ISR arsenal, the U.S. positions itself for multi-domain air superiority. So where does this leave us? Boeing holds the design contract and influence. Lockheed holds a global fleet of F-35s and next-gen enhancements. Which direction wins, clean sheet innovation or upgrade path efficiency, will define U.S. air dominance in the decades ahead. One thing is clear, the sky just got a lot more competitive.